All right, hello everybody. This is Doug Morris, CEO of Sharesight. It's 12 o'clock here in Sydney, so we'll go ahead and get started. Thank you everyone for joining us today. Today I'm going to be talking about tracking employee shares in their various forms within Sharesight. Just a note that this webinar is being recorded and we'll post it to our YouTube channel. So if you want to review this later on, or if you want to go see other webinars and video tutorials we've done in the past, please go to YouTube and just search for Sharesight. We've got a pretty active channel on there. So what I'm going to do today, before I read you this really boring disclaimer, I'll just give a bit of a brief background on employee share schemes, employee options, RSUs, just a primer for us. And then I'll jump into the product itself and show you how to use Sharesight to keep tabs on employee options. So first things first, Sharesight does not have an AFSL. We are not licensed to give financial advice. So anything you hear today should not be considered advice. It's my personal opinion, just showing off the software. So if you do have questions around investing strategies, investment choices, or any taxation, which is especially important when it comes to benefits like options, please do seek out professional taxation or investment advice. First things first. I should mention too, one important thing too, please do post questions in the chat and I'll circle back and get to those after the presentation and the demo as well. Sorry, I forgot to mention that. So first things first, stock options and RSUs and all manner of incentive programs, they really turn employees into investors. So this is kind of I don't know, almost like a disclaimer that I like to say during these things, because I've often talked to friends or partners or family in the past, and they sort of treat stock options or stock-based incentive plans almost like a cash bonus, and they're not really. I think there's an assumption, and there has been an assumption, especially in the tech world over the last 10 years, that sort of this is just a bonus and it's going to be translated into stock and it's just going to be worth something and it's going to grow. And that's not always the case. Effectively, what an employer is doing is sort of substituting cash for a stock grant, if you will. And then, of course, that sort of turns the employee into an investor straight away. And so from that point on, it's almost like they need to think as if they've made an investment decision. So you've gotten this investment in lieu of cash. And of course, you can sell it, you can hold it, you can sell part of it, buy something else. And so really, this should sort of force employees who are lucky enough to have these incentives as investors themselves. It's also good because it also sort of gets people hooked up with an online broker. So I go back to my early days working in the US for Morningstar. They IPO'd in the early 2000s. And then all of a sudden I had, an online brokerage account that I could play around with and have a look to see what was happening. So it was a good sort of educational opportunity for myself as well. It does create some admin headaches. It really does sort of create a paper trail that you need to worry about, and that's really important when it comes to understanding not only how you've gone from a performance standpoint, but also from a tax standpoint as well. So just quickly on the history of options. The kind of the idea of profit sharing has been around for centuries. But when it comes to kind of modern day stock options or stock grants or RSUs or whatever, there's a whole range of names for them. It really, surprise, surprise, started as a tax avoidance or a tax mitigation strategy back in the early 1900s after the First World War. And so employee ownership was seen as a way to kind of get around what was then really high income tax rates. Then in 1950, the Revenue Act passed in the US, and some very smart engineers at Fairchild Semiconductor, the famous, one of the famous and most earliest tech companies in the States, said, hey, you know what, we want to share what we're doing here. We think that we should be paid in options or stakes in the company. During the Reagan administration, there was a slew of tax changes put into place that basically reduced the tax treatment on options down to the most minimal rates apart from taxable income. And then they became very popular in Silicon Valley, and it kind of propagated backwards towards the more established industrial companies. So some really interesting reading on what is kind of a boring topic, to be honest with you. In the wake of the dot-com burst in 2000, thousands of people, kind of middle management types, all of a sudden had huge tax bills they couldn't afford to pay because their options were underwater, which means that they were granted at prices that are higher than what they actually traded at, and the tax was needed to be paid on when they were granted to the individuals. That was actually written off by Congress after that. There's been a lot of scandal in the options world around backdating because, again, these things kind of exist in just in paper and in spreadsheets, again, with the admin nightmare. And what happened was it turned out that almost a third of public companies were actually going back and manipulating the grant prices or the grant dates to ensure that a gain was sort of artificially created. So if a stock is trading at, say, $100 and it was granted at 90, they'd go back and they'd actually change the grant date to be a date where the price was lower to produce a better return, or they just go ahead and change the grant price to like 50 altogether. That was kind of like found out and obviously frowned upon by tax agencies. But fundamentally, these schemes have become a real innovation driver for companies, notably startup companies. We use them at Sharesight for our staff and for myself. And it's a great way to create alignment between ownership and employees, and also a great way for companies to provide sort of a non-cash compensation element to their staff as well. So they're really useful, but just the admin and the tracking does tend to be a bit of a pain. Just a quick kind of rundown on options versus RSUs. So when we talk about stock options, these are basically unitized options that carry an exercise price. It's a call option effectively. When somebody exercises the option, it translates into share ownership at the prevailing price. Those shares can be held or they can be sold. I think a lot of people often sort of combine the notion of exercising and selling at the same time. That is often what happens as people sort of have these options for a long time, particularly with a tech company that grows over time, and all of a sudden, they've reached a transactional event like a listing or being bought out by somebody else, and they want to sort of at once exercise and exchange their options at the same time. It's known as a cashless transaction, where you basically just get the difference between the two. Typically, stock options have a vesting schedule that's done over a number of years, say 3 or 4 years. And that is in addition to or in replacement of a KPI scheme too. So it's like, all right, we must hit this target and they will vest, which sort of provides those kind of longer term incentives. So tax is something to definitely be wary of when it comes to stock options. Tax can be triggered at the exercise event and or the sale of the shares, and depending on where you sit around the world, kind of who you belong to from a tax office standpoint, it's really important to get good advice on this and or read up on the rules yourself, because you're going to have to pay tax probably, depending on where you live, on this stuff. And there are ways to sort of pay tax up front, with which kind of get it out of the way and enjoy a potentially lower tax or tax-free return over time. Or there, you need to basically ensure what you're kind of up for when it comes to a tax bill, because you can't have a situation with options where you owe tax on something that you haven't realized yet. So you need to come up with the cash in one way, shape, or form. And underwater options, as I mentioned before, that's essentially where you've been given a stock option with an exercise price of, say, $10. And it just so happens that the stock is trading on the open market at a value of $9. In that case, it doesn't make any sense to exercise the options, because you could be paying tax on something that's worth more than the actual underlying asset. So those do tend to be a problem if companies don't meet expectations or go under altogether. And it does get complicated. So if you're thinking about how options vest in what's known as tranches, and if you expect that you get more than one of these bonuses, it does create this waterfall effect that can be difficult to keep track of. So this is frankly best done in a spreadsheet. It's not something that we can do for you at Sharesight. It's kind of not what we do, but as you can see here, it's just basically a matrix where, in this case, let's say you've been awarded a bonus in 2021 with a 3-year vesting schedule. You have 3 sort of events, and then the same thing for the next 2 years after that, 3 more events and 3 more events. So in this case, 2023 is a very busy year because you've got not only a bonus that's been awarded this year, but you've got tranches from 2 previous years vesting during that year as well. So just a simple matrix like this is a good way to keep everything under control and documented. And again, that admin is so important because frankly, a lot of these option programs live in spreadsheets. They don't kind of belong anywhere official. They've probably been blessed or tracked by the accounting firm that the company uses. They're granted on, letterhead that may change over time, that's sent via email or Slack or post or whatever. There's no kind of source of truth other than the company secretaries themselves when it comes to options. So whenever you receive them, my encouragement would be to really get this down in a document that you understand, that you can check in on, year after year. And it's also a good idea to kind of get this signed off by, the finance department or your manager as well, so that you're never, in for a rude surprise when it comes to a liquidity event or, you leaving a company where you've received options. And then lastly is RSUs, restricted stock units. These indeed are different to stock options. A lot of people do confuse the two. These have become more common, especially for larger, more established companies, US tech companies, namely. So like the Googles of the world, Microsofts of the world issue RSUs. It's essentially like a cash bonus that's given to you in shares kind of all at once. So it's basically like, okay, here's a $10,000 bonus and it's in shares. It's translated straight away into ordinary company shares. RSUs are technically a different security type, but for all intents and purposes, they are ordinary shares. Often income tax is withheld, just like in a paycheck. So that makes it, it reduces your amount you're getting, obviously, but it does make it cleaner from a tax perspective. There is a grant price, but it's often done at like an average price during the grant window or the grant date. It has been a little bit more common, especially as tech share prices have been falling, that these grant prices can be refreshed. And so for, say, for example, some unvested RSU units you may have in the future, if those are set at a price that's just not going to be achievable anytime soon by a company, some companies have very generously refreshed those down to lower prices, which means that there's more of a gain to be made. As I mentioned, they carry vesting schedules as well, so they can have their own sort of sets of rules that comes along with them. But effectively, again, you're getting shares in the company, whether you like it or not. So what I'll do now, I'll just jump into Sharesight, and I'll show you how we can track these in our software. Just bear with me just one moment. Okay, so there we go. That should be good for Sharesight. Just maximize my screen. It's always a bit tricky when you switch between applications. Alrighty, so this is Sharesight. Don't mind that ugly red banner across the top. That's just because I'm an employee here, and we do that to ensure we know we're logged into which appropriate environment. So this is a sample portfolio that I have in an expert plan account, which allows me up to 10 portfolios. So I'll go through a couple of different ways here regarding RSUs, regarding stock options, be they vested or unvested. I like to kind of do it a little bit differently in the software. And then I'll show you how to use custom investments as well, because I guess everything I've sort of just gone through in terms of the background and the primer assumes that these companies that we work for are listed, but they're not. In fact, in the case of Sharesight, we are a private company. So what do we do about those? And I'll show you a way to get those into the system as well. So for RSUs, because they're quite straightforward, again, it's kind of just that cash bonus in the form of shares. I'll just stick within this portfolio here, and I'll add those in an example. So let's just say that we work for Microsoft and we've been given restricted stock units for an amount. So the way to do this, and because remember, these don't sort of emanate from a traditional share purchase, right? There's no action that happens on a broking platform. The only sort of action that would happen is when you do dispose of them, if you choose to do so down the track. So what we need to do here is use a manual transaction. And so what I'll do here is just go to this little drop down next to add holding, and I'm going to manually add a trade, right? So some of you may never have seen this before. Some of you may have. This is a perfectly fine way to set up your portfolio. In addition to, CSVs and the broker connections we have. Effectively works the same way. And it kind of does a nice job of explaining how the system works as well. So as I mentioned, we're working from Microsoft. So we'll just whack in MSFT and we'll find Microsoft. So again, we're just using the ordinary share. There's no reason to come up with anything fancy or look for a different type of security. And let's say we were awarded these RSUs. We'll go back to, we'll just say January 1st of 2023. This is for our hard work and our dedication to Microsoft through the course of calendar year 2022. So in this case, what I'm going to do is I'm going to check the documentation that I would have received from my manager, because it'll should be documented in this case. And I'm sure it would be at a company like Microsoft. And I'm going to enter the quantity that I've received or the quantity that I've received. So let's assume we've received, sort of 10 units in Microsoft for the price on that day. So you can either rely on our closing price, which on that particular day was $239.82 US. So you can populate that automatically. If your RSU grant stipulates a different price, it could be done on what's known as a VWAP, or a volume weighted average price, or a average price between, the week of this and the week of that, or the month of this and the month of that. You can always manipulate that here as well. So instead of the closing price $239.82, the documentation may say it's $245 or $240. The point being is that this is all editable in the system. The other thing to note, though, and depending how the RSU is given to you, you don't necessarily need to treat this like a buy transaction. You can use another function, which is very useful, if not a bit less popular on Sharesight, which is the opening balance function. So this one will allow you to just put in a cost base and a quantity. So if your letter is a bit different and it says something like, okay, congratulations, Joe Schmo, you've received $25,000 in Microsoft shares, and there are this many. You can kind of go the other way around. So you can enter the cost base and the quantity, and Sharesight will then work out the average cost per share, which we'll use in its performance calcs. So just another way to kind of go about entering the data into the system. But I'll go back to my buy trade, and let's just say we're going to get 20 units for a unit price of 240. The other nice thing about this is that it works out the exchange rate for you as well. So a lot of us work for companies that are domiciled overseas, and we may receive RSUs that are in different currencies. And that currency difference has an impact on what you receive now, and it'll also have an impact on what you get when you realize or sell the shares down the track. And that's all necessary for not only performance reasons, as the currency fluctuates, that impacts your return, but also for tax as well. So before I save this trade, I want to just highlight another really useful function here in the kind of the admin realm of Sharesight. We have this comments and attachments functionality. This is a perfect place to store the letters, the grants, the awards, the scheme rules you get associated with RSUs or options. So, you might say this is sort of RSU grant for, FY22 given on, 1 Jan 23 or whatever you want. And then if there indeed should be some documentation, you can just drag and drop to this transaction as well, and it'll save it against this trade, if you will, which is really useful. So we'll save that. And now we're back in our normal portfolio, and we should have our Microsoft shares in here. Yes, we do, just as per normal. So I'll just hop into that really quickly. And of course, this is treated just like any other holding in Sharesight. And the nice thing here too is that it is capturing our dividends or distributions, which you are subject to in terms of getting that income, and you are subject to from a tax perspective as well. And this can be a real hassle, frankly. I'm kind of speaking again from kind of the tech perspective here, where dividends are not necessarily the reason that people are interested in owning tech shares. It's more for the upside, the capital growth. But if the company does pay a dividend, you need to sort it out from a tracking standpoint. I reflect on my own experience again with Morningstar. They they didn't pay a dividend for a while, and they started to pay quite a nominal dividend for various reasons. And all of a sudden, as an American living in Australia with shares in an American company paying dividends in US dollars with tax, it was like these dividends they're not even worth the paper they're written on, frankly. But I had to report them for tax purposes, and Sharesight will track all this for you, including the foreign exchange rates as well. So you can see in this case we've got a couple of dividends that have come in, and Sharesight automatically populates all the nitty-gritty components underneath the gross dividend as well. So just one other point on the RSU front when it comes to our Microsoft example here. You're in this holding page. If you scroll down to the right-hand side, what you'll see is your file attachments here and your comments that we've made. You can you can attach attachments and comments against the holding or the trades themselves. You can see scrolling up here just a little bit that I have a comment against these dividends and a comment that I made against the transaction I was given. So that's all stored there for you against those handy little icons. But a really nice little feature is labels. And so if you go into labels and you click manage labels, you can create a label for RSUs, or you might create a label for employee shares or something like that. So let's just say we'll do employee shares. And then we're going to find Microsoft, tick that, and we'll create the label. So that's done. So now we have this sort of pinkish label that's against the Microsoft holding. So I'll close this. And if we just go back to the portfolio overview, you can see here when I scroll down my list of investments, it's very clear to me which have come from my employer and which ones I bought outright as well. So if you've got a bit of a busy portfolio, this could be a useful way to create just a visual indicator as to kind of what belongs to what. And that'll continue throughout the application into performance reports and so forth. So that's kind of RSU. It's pretty straightforward, essentially adding a manual opening balance or a manual buy trade. Now, when it comes to options, it's a little bit more complicated. And what I like to do in this case is actually create two different portfolios for options. So one of those portfolios is for vested options and one is for unvested options. This is a personal choice. You can also manage some of this with labels or with custom groups, and I'll show you that in just a moment. But I kind of just like to keep these clean from the perspective of what I own and what I don't own. And whenever it comes to the way you set up your portfolios, you want to first and foremost respect the tax entities that you're investing in as well. So, you may have, superannuation in one portfolio, discretionary portfolio in another one. In my case, a 401k in the States as well, inside my real account. But again, for options, I do like to keep them sort of quarantined in separate portfolios. So what I'll do for this example is just come here and create a new portfolio. And I like this too, because it kind of shows that Sharesight can be used in quite flexible ways in sort of these hypothetical scenarios as well. So we might call this, vested employee shares, right? We'll just leave the tax residency to Australia. We won't change any of that. Tax entity is just the individual, and we'll create. So now we have this blank canvas with which to add our investments. And in this case, again, we're not importing from a broker. Chances are this doesn't live in a CSV file. That's overkill. We're just going to manually add a trade here, right? And we'll add our, we'll use Microsoft again, example. And in this case, let's say we're kind of going back in time to kind of play some catch up on admin, and we'll go back and we'll just basically add in one from a grant we received in January of 2021. So again, that's for our hard work in 2020. And we'll receive the quantity and all the rest. So let's say, again, we got 10 units here. The price back then was that, and away we go. So this is just a way to enter in the vested amount, because we're assuming it's now vested over time. So you can have that there, and it can live sort of in this vested portfolio where it's sort of protected, and where I guess from an organizational standpoint, that you can action these units and they can be sold. It's sort of, with one sort of lot, it's kind of a simple example, but I kind of hope you get the point. And then the other thing we can do is we can create a new portfolio. And this one can be for the unvested shares. Unvested employee shares. Again, leave all that the same and then create. So then what we can do is we could essentially refer back to our matrix that I showed you before. And we can then just manually manipulate what tranches go where. So, if you received, call it, 1,000 units over 3 years, you just basically take 1,000 divided by 3, you set it up that way. And as the unvested units became vested, you would essentially just delete them out of the unvested portfolio and add them into the vested portfolio. So let me just continue with the example here. These just quickly. Save. Oops. Go. So now these live in the unvested portfolio. That's obviously quite straightforward. But then what you can do to kind of make this all come to life, you can create a consolidated view. And then you can basically, give it a name like overall, invested wealth. And then you can include your portfolios, namely the vested and the unvested portfolios. And then you get this wonderful performance view that's a rolled up version of Sharesight, essentially. And you can scroll down and you can see what belongs to what, right? So you can see my Microsoft Corp here is coming from my portfolio, again, carries that label through because it's an RSU. And you can also see Microsoft from my vested pool and Microsoft from my unvested pool as well. And again, this is a little bit noisy. So another thing you might consider, you can come in and use our custom groups feature. And you can basically set up a different view for the way you kind of want to sort of see your portfolio world. So I have a pretty basic setup here where I've got some precious metal stocks, core ETFs, big tech, China tech. This is just kind of for illustrative purposes. I'm going to add a new category over here, and I might call this just, employee shares. And then I drag and drop Microsoft from the ungrouped investments over to that category. And now that's set, right? And by the way, you can come up with different custom groups as well. So there's a number of ways you can slice and dice how you report on your holdings. Then I go back to the overview. So this is my overall invested wealth. This is my consolidated view. And then if I wanted to, let's say we want to run the contribution analysis report to show the kind of detractors and the gainers in my portfolio. And then I can not group by market. What I might do here is just go to Doug's grouping, which is the sample one that I just showed you. And now we can see in our nice rolled up categories, big tech is here, precious metals is here, China tech, certainly not helping me out, core ETFs, and then my employee shares and how they overall impact my portfolio as well. Because again, it kind of comes down to how you want to think about asset classes too. I mean, you might have sort of a worldview. Maybe you invest in a core satellite approach. Maybe you like sort of traditional, blue chips and kind of a core approach. Maybe you do that through ETFs. Maybe you have some more speculative kind of, tech stocks peppered here and there. But the employee shares is maybe something you consider to be different altogether. Again, it's kind of that forcible cash bonus into shares concept that I personally like to track differently, because again, you're sort of in your job every day. As CEO of Sharesight, I'm working hard in the business. I own, a portion of the company. That's kind of, part of my sort of day-to-day, my salary, my long-term wealth. What I do on the more discretionary investing side, in my opinion, should be separated out, at least from a reporting standpoint, in this case. And you can use that custom group all throughout the product. So it also extends to the overview page as well, where you can group by, your own custom groups as well. And then you can run performance charts, for example, and see how your employee shares have gone against your other sort of normal investments as well. Let's see, in this case, yeah, employee shares actually held up pretty well. Microsoft, as far as the tech company has gone, has performed not too bad, all things considered. So again, that's kind of how to think about tracking employee shares in Sharesight. So RSUs, again, to recap, are pretty straightforward. You can just enter those as buy trades or opening balances. Options, again, a bit more tricky because you have to keep an eye on which tranches are vested and which are not. And again, I like to use different portfolios for those. Strongly recommend using the comments and the file attachments to keep a paper trail of this stuff, because there's typically cases where these things go sort of undocumented and you sort of lose track of them. And then using custom groups to kind of separate out employee shares from the rest of your portfolio. And then consider using labels as well to kind of have just a nice visual indicator of your employee shares, your RSUs from the rest of your portfolio. So with that, I'll say thank you very much, and I'll just take any questions that may be posted in the chat. And if not, thank you for joining.